Zafir, thank you so much for being here.
Thanks for having me.
You were one of the fastest promoted executives in one of your past companies, but you still decided to leave and start your own venture. Why not stay in the comfort of a company that appreciated you so much? Why start your own business?
So it's a great question. So I think leaving is a generous way of putting it. In the business that I was in previously. So I'll give you a little bit of the background of where I come from and kind of my backstory of how I've ended up today at Next Fund as the founder and how this started off. So many years ago, started off in working as a director of marketing and sales. Nothing to do with private lending, nothing to do with subprime lending. And I heard a lot of people were making a ton of money as being sales representatives within the private lending industry, which for me was strange because I figured that you would need to have a background in finance, you would have need to study for years, or some kind of vertical field or parallel field, I should say, that would be within the scope of what they were looking for. So after working a couple of years as a director of marketing and sales, I decided to go get interviewed for a company called we'll keep that name apart, but it was a large subprime lender in Canada. And when I got there, my first question was, you know, obviously like every hungry salesperson or someone that's trying to make it through commission is what do your top earners make? And the first response I got was between 8 to 1. And I said, oh, 80 to $100,000, that's fantastic. And said, no, 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 800,000 to $1 million a year. My instant response, this is bullshit. Don't tell me that there's uneducated people that are making seven figures potentially off of commissions. So the HR brought me upstairs and it was like walking into the Wolf of Wall Street. It was a floor which was completely flat up open. People were pitching above the desks and the side of the desk. Um, there was a square office, fully glassed out, and I was instantly in love. Within 3.5 years, I became one of the top originators in the company. I started to learn just outside of, consulting customers and getting their documentation. I started learning about how we underwrite clients. How do we adjudicate them? How does our financial models work in the background? Why do we mitigate our risk a certain way? How are we agile versus a bank? So my curiosity peaked when I saw that, the financial benefit of being working in that kind of environment was apparent, but I did want to see that next step where potentially getting onto the other side of the business, which is actually becoming a lender or working with lenders outside of working for just one lender or as a company. And I decided to join a company called Flinks. Flinks is the largest data aggregation company in Canada. So essentially, what they do is they pull transactional data from business bank accounts and consumer bank accounts, and they provide data enrichment. So they can actually tell you what your operational expenses, your liabilities, your payments are. And so over the course of 2 years, my mandate with them was to work specifically with business lenders across the US and Canada. So I would visit these lenders and I would see, how they're evaluating their customers. How could we provide additional value? So as I was going, I was able to actually see the fundamental of how people are underwriting the business. So for years and years and years, from accumulating from originations to underwriting to collections to data aggregation to data enrichment, I decided to take that leap and say, let me go look for investors and let's start this off as a actual lending firm where we syndicate, we broker, and we also collaborate with credit facilities. And so today, Next Fund is one of the largest scale private lending funds in Canada in the last 15 years due to the fact that we've not just mitigated our risk by controlling what capital is coming out of the business, but by using technology, by using automation, by having a product which is the first product in Canada that offers a business line of credit without upfront collateral. So very quick overhead of, kind of the background of where I'm coming from to give you a little scope of, where I was to where we are today.
Now, if I open Next Fund, business financing made easy. Can you tell us a bit about how it works?
Yeah. So what we offer today is we offer a what we call a business cash advance, which allows businesses to access funds between 10 to $800,000 within 24 to 48 hours. And we also have a business line of credit, which a customer can access between 2 to 4 weeks, which is the first credit facility in Canada, which offers a line of credit without upfront collateral. So what does collateral mean? It means that instead of providing, a house or a building or a physical asset, they will be able to provide you with a line of credit based on the operations of the business, based on the revenue that you're generating as a business. So it's the first of its kind, and it's allowing business owners to access funds which have been so difficult to access at the bank and at the traditional level, because on a traditional level, it always requires collateral and a
But
good
that
credit.
means you're assessing the business. You're looking into their numbers. You're kind of getting a feel of, how things might be going the next couple of weeks. Like, what do you take into consideration? Is it just raw numbers or your relationship with the client himself? Like,
So
what is
there's
it?
That's a great question. So there's many different facets of what we're looking at. Each customer that we evaluate, we're looking at hundreds of data points. It's not just singled out off of their time in business, their revenue. We're looking at their financials. We're talking about the line of credit specifically, but
Yeah.
we're looking at their financials. We're looking at the list of equipment they have, their inventory. Do they have a lot of account receivables? Do they have account payables? The banks are primarily focused on your credit score, your credit utilization, and your assets available to collateralize against your line. And so what happens is that 52.5% of the GDP of Canada are SMBs. How many of those actually have viable assets that they can collateralize as business owners? Not a lot of them. So we take those customers, we look at their operational expenses, their liabilities, their payments. We also have a cash flow advisory system, which will tell us, we can actually project the revenue in the business based on historicals and have an actual equation which will tell us the percentage chance if they can meet that payment. So we go a step further with technology, and that's done through data. As a data scientist, that's done through data aggregation and data enrichment. And these are pivotal flows that are not implemented by the bank, that we implement on the private sector to help us, first of all, gain a better knowledge on if this customer is fundable, and above and beyond, will they be able to handle the added debt? Outside of the numbers, and I would say the most important thing that people don't think is important, but it is very important, is character. Character above all, because you could have the best business, you could have the best revenue, you could have the best net profit, you could have be in a great industry, good time in business, but if you have a bad character, ultimately that will be the demise of the business and us not getting paid back. So we also do judge the character of the customer that we're dealing with, their online reputation. Do they have ties with, illicit things? These are things that are important for us when we're making a final assessment on a customer.
I mean, is it you personally, or do you have a team that
No, so
actually,
I don't personally handle that. I do have a senior credit team that works in-house. We also have a senior credit team that works at the credit facility. So on our side, I have my chief risk officer. She oversees our underwriting and senior credit team. Her name's Natasha Tenen. She's been doing this for 35 years. She's worked at executive roles at banks. She is really the one managing the senior credit team
do you sometimes get it wrong?
all the time. It's not about, if you're saying that we get it wrong in terms of default, no, because we do have a low default rate. But yeah, that's the thing about having a lending business. You have to understand, every single private lender, the way that they operate is that they're always mitigating their book of business by shifting their underwriting criterias and changing their shifts in what's a good industry or a bad industry to fund. Sometimes you'll have an industry which is good for 2 years, but there's been a lot of default in that industry and you have to mitigate. If we had it perfect, we'd have 100% payback and we'd be 100% profitable all the time. That's a paradise that doesn't exist. What we do is, when we get it wrong, we use it to refine the book of business and the financial model to get it right, or as right as we can get it, and keep working. And that's a gradual process that goes on for the lifetime of the business.
Let's talk about another service, invoice factoring, which is very interesting. Which
Yep.
is if your customers are late to pay, then you will just pay in advance, and I guess you're taking a cut out of it. But how does this scale? So let's say you have a bunch of them, and you're not really sure when they're gonna get paid. So do you limit the amount of money you give out until you start getting it back? How does it work?
Yeah, that's a very, very good question, especially for invoice factoring. So what we assess in that, we call that redundancy. Redundancy is I have a business where, for example, I'm a construction business that gets paid every 90 days from my customers. Are they regular customers that are purchasing from me often for projects, or are they new customers? So the way that you mitigate your risk in invoice factoring is you look at what we call a redundant account receivable, which means is it the same people always paying back? Is it always the same businesses that you're servicing that are collecting? That gives a lender enough credibility and trust to say this customer for the last 4 years has been getting paid every 90 days from the same merchants. We can provide them with a factoring today, pay them for those contracts that they're going to get paid in 3 months, and then collect the rest afterwards. That's how you will mitigate your risk. So when a customer has different kind of redundancies. Maybe they're getting new clients all the time or existing. You have to mix and match, sorry, your risk. You'll see the ones that are getting newer customers, but have a lower time frame of getting paid back. Yes, it's a higher risk, but they're getting paid back in a quicker setting. And then what we do is that amount, instead of collecting the invoice from the customer, we'll just fund the merchant ourselves, and then the merchant can pay it back anytime that they like with no penalty, and they'll receive a discount at the time that they pay out. So, for example, if today you decide, Antoine, that you're waiting for $100,000 and you need that money today because maybe you have another project that requires materials for a construction, renovation, or demolition, excavation, whatever you call it, we'll give you the $100,000 today. Once you're paid back, you can pay us back into 3 months, and then we can repeat that going forward. That's a way of doing it with factoring. The more suggested way to do this is with a line of credit, which is a more structured product because you use it as you need and pay it back as you can. Obviously, there's minimum payments to be made, but they're both products which would service that kind of factoring scenario.
Payment in less than 48 hours. That's very fast. I mean, I'm not in the industry, but that seems extremely fast. How does that compare to traditional banks?
So a traditional bank would take anywhere from 4 to 8 weeks for funding. You have to understand that when a bank is reviewing a customer for a what we call a business cash advance, they don't just ask for 12 months of bank statements with a front and back of ID like we ask for. What they will ask you for is your years of financials. They're going to ask you for use of funds. They're going to ask you for all your account receivables, your account payables. They're going to make sure that your credit utilization is not high. They're going to see what collateral you have. They're going to look at the liens that you have on the assets. And it's not working at a oh, you send your file in and someone's jumping on it. It takes time. You're going to be put in a queue. They're going to review the files. They're going to ping back the loan officer. It goes back to the senior credit analyst or the credit analyst. So that entire process takes 4 to 8 weeks for you to actually get an approval. And the approval rate is under 15% for business loans in Canada with traditional financial institutions. Whereas on the private sector, or I can just talk on our business, we have an above 70% approval rate. So what allows us to do this is that we don't have the same risk underwriting criteria and minimum requirements that the bank has. They're very heavily focused on credit and assets and utilization, whereas we're focused on operating revenue, available daily bank balance, and time in business and industry. So we're looking more at the operations of the business while they're looking more at the credit criteria of the business.
Do you feel like you're competing with the bank, or is just people that will probably get rejected, or you're just playing the urgency card, so they have to come to you? So, how do you see your relationship with the bank?
It's a great question. I don't think I don't think we can say we compete with the bank. I think we service clients that could be bankable and those that are not bankable. Because the number one thing that you will learn, and it's been 10 years that I'm doing this, above everything, above rate, above amount of capital, above industry, is time. If you're trying to get financing, most SMBs don't plan 2 months in advance. You're getting an offer from your manufacturer that you can get a 25% discount, and you're going to flip that sale within a month, but you need to buy that within a week. No bank is going to give you that capital. You're a restaurant owner that needs to build a patio for the summer. Your summer season's coming up. You only have a week to build a patio. By the time you get the money at the bank, you're halfway through the patio. It's cost of funds versus cost of timing to borrow. So, do I wait 2 months to get financed, potentially get declined, and lose but all the opportunity or 50% of the opportunity, or do I get funded today and not take the additional risk and get the funds in and get my project going? So it's cost of opportunity, which is above all the source and the soul of every entrepreneur, which I think is why we don't compete with the bank. We service clients that are bankable as well, and we service those that are not
Zaf,
on the
it's
injection of capital.
a great answer. Zaf, it's been almost 18 months. What has been the most challenging part of running your own business?
Yeah. So this is a good one. You need to surround yourself with people that are going to help you grow, but you need to delegate. The problem with our line of work, especially when it comes to dispersing capital, you always want to be on the front line and on the back end. And the faster you realize that you cannot be on both sides, you need to delegate, the faster you'll grow. My number one mistake when starting the business was trying to work in hands-on rather than overseeing, delegating, and building out the business. These are key, and this comes with I wouldn't say the anxiety of leaving a job or the anxiety of, the lifelong question of if you're going to be successful or the lifelong question of, am I really built and able to do this? You're going to go through many hurdles. As a new business, we still will have a lot of hurdles that we will face. It's how we're facing them that will help us, but it's not me alone that's facing them. I'm facing them with a team. And if I didn't have that team, I wouldn't be here sitting talking to you. I wouldn't be able to disperse capital. I wouldn't be able to service our customers. Where you're always going to have a lot of naysayers. You can make every single customer happy when you're in lending. You will also make competitors mad, and you will get a lot of you'll get a lot of people that will try to harm your business or harm you. The number one thing is delegate. Delegate your stress, delegate your workflow, delegate your time. And as a data scientist, you know that when you're doing a data flow chart, you don't send everything into one direction. You want to make sure that you know exactly how you're sending it off. So that's the same kind of mentality that I've developed over the time and that I'm building the business out.
Zaf, I'm going to end with this. What's the next big milestone for next fund?
So our next step that we are trying to do, and we are hopefully going to acquire, is we want to acquire a Sharia certificate so that we can actually grow into the Middle East. There is a lack of lenders in the Middle East that are obviously compliant with the Islamic Advisory Board. So we're hoping that in the next couple of weeks, we're going to work towards getting that, and hopefully our expansion into will start in Dubai as our first expansion and continue from there and see where we go.
Zaf, thank you so much for taking the time. We enjoyed our conversation.
My pleasure. Thanks, Antoine, for having me.